Good evening. Good to be back with you guys. I'm Peter Reznicek, of course, from ShadowTrader.net. This is another edition of the ShadowTrader Video Weekly for Sunday, May 16th, 2021. I had to title this video, Should I Buy This Market? Because I know what you're all thinking. You're thinking the same thing that everybody else is thinking. After a down move like that, and then a very violent upswing as we saw on Friday, should you buy this market, right? Is it time to get back long into this market? Maybe. There's a lot of mixed signals out there. This video is going to touch upon a lot of different data points. I hope you will enjoy it. It's going to focus pretty much all on technical analysis. I'm going to keep it relatively simple. We're going to talk about OHLCs. We're talking about trend lines, all that good stuff in TA. We're not going to get into market profile because I don't want to get too granular in this video. I want to keep it just to TA. We're going to look at what the S&P is doing versus the NASDAQ 100. And you'll see when I get deeper in the video that I think the key to everything here is really the NASDAQ 100 and not the S&P. That's where a lot of the technical nuances lie. And I think that's really the key to the market going a bit higher. So we're going to look at all that in detail. We're going to get into some market internals just briefly. I want to show you how things laid out on Friday, which I think is definitely a mark in the bull column, I would say. I mean, the internals were very, very strong on Friday, so I wanted to show you that. I do have some trade ideas for you. I went through all my charts, and I've got a decent number, a handful, about 5 or 6 different trade ideas that I want to share with you, give you also some potential ways that you can play those. And then at the end of the video, I'm going to wrap up with a look at gold and Bitcoin, because these are also two instruments that I think are on everybody's mind right now. Gold is actually finally firming up, meaning that it might actually be breaking its downtrend. Now, it's done this before. I always call gold the heartbreaker trade because you get into it and it breaks your heart. But maybe this time is different, so we'll see what's up with that. And Bitcoin has also been really weak recently. It just had a very, very bearish week, coming off quite a bit from that 60,000 high recently. So I'm going to look at the Bitcoin chart. I'm going to show you two specific, actually 3 to be honest with you, but 2 that might be coming up very soon. 2 or 3 very specific buy points in Bitcoin. All right, so I hope you enjoy that. All right, without further ado, let's get into it. All right, getting into it, as I always say at the beginning of each video. I'm starting on this S&P daily chart, but in reality, as you'll soon see, we're going to spend more time and do a much deeper dive on the NASDAQ 100 chart. Those are the stocks that I personally am most interested, especially Fangman plus T. And there's a lot more going on technically in that index that I want to go over. But just to start with the broadest strokes of the S&P, which is obviously a very broad index, but much broader than the NASDAQ 100. Let's just go over technicals for a moment on that. So first thing to notice is after this dip down, we did cross back up over the 20-period moving average, and more importantly, we closed above the 61.8. I like to keep my TA real simple. You'll notice that when you look at my charts, they don't look like spaghetti. All right, a lot of people's charts, they have all these different moving averages that are stacked and exponential and different standard deviations from certain means, and then on the bottom, there's RSI and CCI and God knows what else. I don't do any of that. I really feel like all that stuff is derivative of price, and you're just really kind of clouding the situation a bit. And simple TA, I think, works the best. Concentrate on opens, highs, lows, and closes. Concentrate on where price is in relation to current OHLC and past OHLCs. Concentrate on things like what should a market do when it gets to here, and then if it doesn't, you have MGI, market generated information, to glean from, right? Everything is just basically giving you market generated information. Your job as a trader is basically just to keep an ongoing narrative. Could keep it in your mind, you could keep it written down on paper, it doesn't matter, and add to that narrative every single day with whatever new market-generated information you can glean from the market. And of course, as I always say, huge difference in market-generated information, which is real and absolute, as opposed to non-market-generated information, which is such things as, I think interest rates are going to rise, and that will be negative for stocks. Nothing in that statement is coming actually from the market. It's just coming from your opinion, or it's coming from some source outside of the market. The market did not generate that information, so to speak. So, keeping all that in mind, looking at the S&P, we would have to assume that things are back to bullish, I guess, for the most part, only because we closed above the key 61.8 and we also are back above the 20. But here's where things get a little bit dicey, and this is why I'm not 100% sure that it's time yet to buy stocks again, but I am leaning more towards the bullish camp now than I am to the bearish camp. Certainly a little bit more off of the neutral stance that I had last week and in prior videos recently. So here's where things get interesting, as I was saying, in the NASDAQ 100. Obviously, the move down was more protracted. It started all the way up here, and we came right to trendline support. And right here is where it was kind of a fake out to me right away. And actually, before I even get into this trendline support, let me rewind. Let me start back here. I want to point out these 2 days, okay? These 2 days had equal bottoms on a pullback here. And then you had this crazy gap to the upside, and then it was off to the races to the downside. And in doing so, you actually breached this double bottom low late in the day, and you ended here below it. So that's a very bearish sign. But again, as a testament to how things have really gotten a little bit off kilter in this index, the next day you have exactly what you would expect, which would be a gap down. This was pretty obvious that we would have a gap down because you closed underneath this double bottom low, this support. There's got to be a lot of people kind of trapped and stuck, especially this gap in between where things got wild probably brought in a few buyers. And those people who had poor location buying here or covering shorts, they kind of fuel this downdraft. And what does it do? It closes below and it closes right on the 50. But again, here's where things get interesting. We actually gap down, no big surprise, but then we spend the entire day rallying. And if you look back on this chart historically in the NDX, it's probably one of the biggest one-day point rallies in months, certainly of the year, especially when you consider that we're looking at just open to close, just the body, not the shadows. Maybe there's some days here on the upside. I don't even see them, to be honest with you. It might be bigger if you include the shadows. But as far as just point gain from open to close, it's massive. So instead of gapping down and holding, you rally like crazy. But when you rally like crazy, you go to where? You go and you stop kind of, to me, where is expected, because you don't make it all the way to the double bottom, but you make it right to the 50 and you stop. Okay? That in and of itself I thought was a little bit more than expected in the rally. But again, we didn't get over this area, so you got to figure stay bearish. Next day we gap down, we open here, and we come to the trend line. That in and of itself would be a bullish sign, but it's usually better to wait and get a little bit of confirmation. You can be Johnny on the spot, so to speak. You can buy these lows. I do that all the time for day trades, but not so much for longer term trades. But in a day trading environment, those of you who know my style, you know that I am a professional knife catcher, so to speak. I have absolutely no problem with that. People always ask me, how do you buy the pullback to the VWAP? How do you buy the prior day's low? How do you buy any pullback to the 15-minute, 20-period moving average? I'm just throwing out typical patterns that I'd be using intraday. And I always say the same thing. I put the orders in at limit, and I leave the orders there, and I let the market go down in and fill the limit orders. And of course that can result in stop outs sometimes, but it also results in always getting the fill at the exact price that you wanted, right near what is potentially the low of a move. But if you're doing this for longer term, meaning that the instrument that you're trading might fill you and then close weak, meaning that it doesn't bounce very much, and now you're holding overnight and you're scared of a gap down. And this NDX is absolutely typical of that, because notice that you closed, you went to the support, you just broke it by a tiny bit, but you didn't have a big bounce. You didn't close up here, you closed near it. So you'd be kind of nervous holding this overnight because you're not 100% sure if the trend line is going to hold. The next day, which is Thursday, and again, there's so much to glean from this NDX, things just get interesting here. You gap up a bit, but then you sell off back to the trend line, and then you close somewhere here at mid-range. Now, my view on the market after this day, to be honest with you, was that I thought it was weak, because usually these trend line touches they don't need this much time to resolve. They really don't. they will just come right in and close strong. Like, look at when we came in here, right? We just came right in and closed strong. And it happens like all the time. Like you'll come into a level like this, and the next day it'll be kind of like off to the races. Here we didn't do much, and we had every opportunity, I thought, on Thursday to rally, but we didn't. We just kind of stayed down in the range, and more importantly, check the body. Remember what I said earlier in the video? I said focus on OHLC. Think of each day as like a battle, and think of who won the battle. To me, the sellers were still in control because you're in the middle of the range. So I'm kind of thinking it's sit on hands. It's not, it's potentially we could go lower here. We're just kind of riding the trend line. Doesn't necessarily need to be a long. Friday, we gap up and we rally like crazy. And we'll get into internals in a second because they were really strong. And look where we stop. We stop right here again at the double bottom low. Now, my take on this technically is that if the market was going to continue to go lower and break the trend line, I don't think it should have went to this level. I think the bounce would have been less. Okay, I think that sellers would have been active. And also I'm noticing that even though this was a bullish day, from here to here is actually a down move, because you open the move here, and even though you have this bullishness in between, if you look at this entire move from here to the lows, it's a down move, meaning that it starts here and it ends here. This is a close. We have now retraced 100% of that down move, and you've heard me say this many, many times. When you retrace 100% of a move, oftentimes it's very, very difficult, and the odds don't favor going back down to the low. So what does that tell us? That tells us that more or less, probably, the potential, I should use words like potential, is there that even if we hook lower here, we can come back to the trend line. And I do want everybody to notice that this trend line is not yet broken, so that means that the trend is still down in the NASDAQ 100. It won't be up until you break this area and go up. And beyond that, in direct contrast to what the S&P was doing, look at the fibs from the top of the NDX. 61.8 and 50 completely intact. Haven't even come close to either. We're not even close to either. So this is noteworthy. So just keep this in mind. So this is what I'm going to be focusing on early next week, to see how the NDX reacts to the trend line, to see if indeed any area under here is safe. So you should be thinking put sales here. And on a pullback, you probably want to be thinking put sales. Like you'll get a pullback, it'll stabilize, and maybe you get your first turn higher. And as soon as you get some confirmation of higher, that's where the short put goes under here. And it could be in a plethora of different structures. I like broken wing butterfly. I like ratio spread. But there's a lot of different ways you can look at collecting a credit against that level. And then if you do hook up and actually cross the trend line, then you have to assume that this is going to be your target, that the NDX is going to probably make it up to 13,516, especially if and when we cross this line. Because we know this was very strong support because it happened twice, then it breached, right? Obviously, I don't really want to use the term strong support, because a lot of times when you come back to a very nuanced level, that's actually what we call a weak low in market profile, because you came this low here is weak because it came right to a very nuanced visual mechanical level that everybody can see. But regardless, instead of using the word strong, use the word significant. It also starts with an S, so I don't have to change what I wrote on the chart. Think of it as significant. Obviously, there were buyers there. There was a lack of sellers there because it happened twice. And then you broke, and then it stopped there again. And it kind of stopped here again on Friday. You pretty much ran right to it. So this is the important area, I would say, in the NASDAQ 100 at 13,401. And I've just given you a number of different scenarios of how it can play out. And if at some point that level is breached, as I was saying, I think it'll be easier on a pullback first and then a rally too, right? Then where's the NASDAQ 100 going to go? We're going to see the 50 here. You'll move from 401 to 516. That'll be 100 NDX points, and maybe even to the 61.8. And notice that the 61.8 has the 20 MA coming towards it, which will obviously move lower with price. All right, so keep all of that in mind. All right, now let's get into some ideas, because it's one thing to talk about, this is how I see the market, but it's another thing to come up with ideas. And obviously I do that all the time in my options advisory, and we follow through on that with trades. We've been relatively quiet this past week. I said that it was kind of a wait and see. We did put on a number of plays, I think about 4 total, and we were net positive, which is good. We had the good fortune, or I should say forethought, to not get too heavy on the put side in terms of any sort of debit. So we did what we usually do, which I like to do, is I always say, do not commit big debits to the put side until you have all major averages breaking trend. And we didn't get that, right? We had that NASDAQ 100 come right to the trend line. S&P was still bullish. So how do you do something like that without getting hurt, right? Most people will make the mistake of committing big debits to the put side. And oftentimes they will do that when volatility is expanded, which makes it even more expensive if they're not doing spreads or they're not doing it in a complex manner like broken wing butterfly or whatever, and then they'll get killed on the swing up when there's no follow through to the downside because they're too bearish. So that's why I was saying is that, you know, we ended the week net positive because we did not commit big debits. We worked structures such as broken wing butterfly, ratio spread, etc., to our advantage so that we didn't have big debit layouts. You know, we weren't putting out big debits, and then we were able to adjust and harvest profits as we went, even as the market was turning around and going to the upside. So this is actually very, very important. But while I've been talking, you can obviously see that I have Tesla on the screen. Tesla, I believe, is bearish. Now, I'm not 100% sure of this. The stock could easily turn around and move higher. Buyers could come in. It is sitting at a trend line support, but very similar to what I just pointed out in the S&P. It's not reacting at this line. So you notice that you had kind of a low here, and it kind of retested that low, and now you're right at trend. And Friday was an extremely bullish day, and the stock didn't do anything. It just kind of sat in the side with an inside bar. And this is like a classic example of relative strength, relative weakness that people should pay attention to. So for instance, I'm short Tesla with a structure. I think target is 500, but I don't have any debit outlay. I've got 770, 780, or 670, 680, excuse me, 670, 680 call ratio, because I'm looking at the trend line up at the top here. Let me just make this a little bit smaller, right? If I draw a line like this, and I'll just ignore those shadows because I think they're BS. Notice where this comes in, right in here. Right here, this trend line. See this trend line? This is the 670, 680 area. So I'm okay with having some short put structure there, not naked fully, but ratio spread. And in return, I want to have butterfly here at 525, 500, 475. And you can see I drew it purposely with like a 1, 2, 1 to show you that it's a butterfly. And, you know, if I'm wrong and we stay here, well, guess what? I don't lose anything. If we get some weakness, this butterfly is going to expand and we'll be okay. So you can see that, you know, if sometimes, especially where I might be fighting the trend next week, it makes sense to put on a structure that's not going to lose anything if it doesn't go anywhere. That's kind of my MO. I like to have things on that will just kind of break even if I'm wrong, as opposed to lose money if I'm wrong. So anyway, though, that's kind of a side, detour. What I'm really talking about is relative weakness in Tesla. Is I want you guys to pay attention to things like this. That if the market's ripping on really, really strong internals, and I'm going to get to those in a second in the next part of the presentation after I show you these stocks, you should probably assume that it's not going to rally. Could happen. I mean, maybe it comes in later. I'm also thinking that Tesla has a short position in it, meaning that it's net short. I think there's a lot of people who have built up a short position here. And you would think they'd be covering, especially on a day like Friday, stock should be ripping. So we'll see. Like I said, sometimes buyers have a late reaction. They may all start covering when they realize the market's really bullish. Could be a delayed reaction, so to speak. But we shall see. But for now, I just think that the reaction at the trend line is weak, especially given Friday's price action. All right, now let's look at some potentially bullish ideas for also next week. I wrote down a few here and going through my list. Chipotle, I put a little alert here. I like the product, so to speak. Look at the congestion here, and you're coming straight into this area between 1250 and 1300. It's probably a buy. They already reported here. They're not going to report for a while. I like it. I just think there's something to be had there. Options aren't so good in this. The way you want to play this is probably just with stock. Just start collecting shares as you go in here. And obviously you can just use options as a hedge or to sell against or whatever. But I think CMG at that 1300 to 1250 is potential buy. Let's look at Google. I put a marker here at the prior high. I don't know if we get there, but I would love to buy this prior high only because the congestion here was so great. There's so much value here, and then it popped out of value. And so I'm thinking that anything here is a buy. This also is good for ratio spread or put structure. That's something I'll probably put on next week. On any weakness, I'll be a net seller here. Anything at like 2100, I would be a net seller. So what do I say? You know what I mean when I say net seller, meaning I wouldn't just sell the puts naked, but I consider myself a net seller if I buy one, sell two. If I buy a long vertical and sell a wider vertical, right? That's called that. What does that make? That makes a broken wing butterfly. That makes you a net seller, right? Because you're essentially selling more vertical than you're buying vertical. What if I did a unbalanced butterfly 132? I consider that a net seller too, right? Because what is an unbalanced butterfly? One long vertical with two short verticals underneath it, right? So you're a net seller. So that's why I like to use that term. So I would be a net seller here somewhere under 2100, given that this is probably very, very supportive. So that's an idea there. Keep that in mind. Let's look at another one. Let's look at Microsoft. Microsoft is just a flat out bullish play. And again, this is where I keep saying that this NASDAQ is just so tricky. And I'm not 100% committed to thinking this is going up next week, but I'm just pointing out what I see. But look at this trend line here, how you have this short-term trend line breaking and then going back up. Again, it just makes it kind of tricky. But at the same time, you do have, just put this drawing tool on. You have potential trend line break, so it's stronger than the NDX, right? Because we know that the NDX is not that strong. It hasn't yet really broken the trend. And if I draw these, draw these all the way in, and we didn't get to that trend line either. And then look, that's broken as well. However you draw it, this is the very short-term one that kind of broke. So this could turn out to be a nothing burger, right? And this could just be messy. Certainly you're not even at the 20 yet. You've rallied above the 50. Where are you in terms of Fibonacci? Barely a bounce, probably 30%. You know, so I'm just showing you patterns that could develop into something stronger, but you know, it's still relatively tentative overall. Let's look at another one here. Palo Alto Networks. This isn't ready to do anything yet, but it's kind of a bubbling under. These sorts of trend line breaks, I kind of only like on expensive stocks. That's just me. I just think they have a little bit more vol, a little bit more, you know, gas in the tank, and they can go. This is a bullish pattern, so just keep that in mind. If we get to the trend line here, again, same MO as usually, you're at 350. These puts are safe to be a net seller, and you can do risk reversal where you're looking at a you know, short put, long call situation, anywhere, somewhere in that area. Two more. Let's look at Shopify. This is also not the greatest for options, but in the theme of like relative strength, relative weakness, like what I was talking about with Tesla, it didn't rally much today on Friday, but it also didn't sell off that much more when the market was really going down. It just kind of had this wild action doing nothing. I think it's building up pressure, to be honest with you. I think there are sellers in here, and I don't think the stock wants to lose 1,000. I think anywhere in here is probably a buy. It obviously worked well here, and it could easily double bottom. This is not a higher high, so it's a little bit trickier because the pullback that's after the higher high is always the best pullback to buy. This is obviously a slightly lower one, but at the same time, it did take out this one, did make a higher high, you know, and again, the strong support of the 1,000 could be something. So again, probably more of a stock play than an options play. And that's about it, actually. I'll leave it there. All right, let me just touch upon internals for 1 second. Then I want to end the video on gold and Bitcoin, because a lot of people email me about that a lot. And gold might actually be finally waking up. We'll see. Obviously, there's a lot of talk out there about inflation. Some people think deflation is coming. I really don't have an opinion on that because I've listened to both arguments and they both seem valid to me, to be honest with you. I mean, the simple way to look at it is everybody thinks that Fed action is going to be inflationary, but it doesn't necessarily have to be. So we'll see how that plays out. But regardless, before I get into that, let's get into some internal action here. I just wanted to point out how Friday looked at the close. And this is bullish. I got to be honest with you. These are strong numbers. I can't ignore this. I mean, this is the advanced decline line just on the S&P. And to be pegged like this, if you guys notice, I've switched away from the advanced decline line on the New York Stock Exchange and I've moved to the advanced decline line on just the S&P. I just feel like it's a better read. But a lot of times I'll talk about that advanced decline line on the NYSE as being pegged at like plus 2,000. And that's what we had that on Friday. You don't see it on this chart, but we had a pegged situation at plus 2K. And when you're up at like 400 out of the 500 stocks, that's kind of the same thing. And it's also the same thing when you see that it just flatlines. When it just flatlines like that, you're probably going to get a trending day. All sectors up from the open, but here's the real tell. Look at the breadth. 8-to-1 positive, 9-to-1 positive. I got to think that is not just short covering. It is maybe potentially both, that there's some new money buyers there as well. Tick distribution was fantastic. Tick distribution is simply how many of these 15-minute bars are closing above zero versus below zero. You can see it's obviously skewed heavily to the upside with the ticks, and the cumulative tick, that's a pretty solid read. 5,400 into the close, pretty solid read. So all this stuff I kind of take into account. Remember that when we talked about the TA earlier, there's mixed signals. Obviously, the S&P looks bullish. It's back up to the 61.8, whatever. But the NASDAQ, not so much. But this is another piece of data. It's another data point, as we call it, to add to the narrative. So as we're creating our narrative, I would put this in it. If you were a scrapbook type person, I'm not, but I'm just saying if you were one of those scrapbook people, you'd probably have a printed out picture of this. And on the scrapbook day of Friday, you'd paste this into the scrapbook. And you'd say, wow, look at these internals, and then whatever, 50 years later, you could be, having a grandchild on your knee or something. And you might be going through your trading narrative, right? And be like, oh my God, I remember May 14th, 2021, and look at the breadth, and the advanced decline line was plus 4. I'm just saying. So, all just stuff to carry forward in your narrative. All right, enough of that. Let's get over to gold and Bitcoin. Let's talk about GC. So something's up. I mean, it's finally doing something. This has been kind of a thorn in people's sides for a while, me included, meaning that I call it the heartbreaker trade. It just doesn't do anything. It would always just kind of rally and it would break different trend lines and then fall back. And, it's just a very difficult instrument to trade. But on a longer term basis, it does look like we might be able to be breaking trend. We'll see. I mean, it can easily go higher and fall back. Like that's what I was saying about breaking trends like before, is that it would do, like this. Like this was a trend line first, right? Well, notice that it broke here and then did all this. Right, so but now it seems like it's holding above trends. No matter how you slice it, seems like it's holding up. Every break seems to be holding, and now we're at the big trend line, where we're doing swing out method from the top to the high. We're just kind of swinging it out. That's the most dominant trend line that needs to break. And look at the weekly; it's looking all right, right? I mean, it's looking better. So we shall see if it's able to break for a longer term in that. All right, let's look at Bitcoin. BTC, very weak this week. Huge weekly bar to the downside. I just want to leave you with two levels that I that I laid out here that I think could be potential pullback buys in the BTC futures. And the first one is just simply this pullback low, because remember, as I always say, pullback low before the higher high is called major support. This is important, and I've got the exact numbers here, so if you want to write it down, it's 44,555, and then I wrote down 42,730 because it's the prior prior high breakout. Now, if either of those fail, you're going to 40. You're going to 40K for sure because that's your trend line support. But I think you'll get bounces in here. Bounces in here if you want to wait. And I don't know if it's going to be that weak or not. I mean, this could just continue to go sideways and then we have another leg higher. And I do think there will be another leg higher. Remember that this sort of consolidation is healthy. This sort of consolidation also creates pressure for the next move higher. And we also have kind of equal highs at the 60. So if and when we do get that move and it breaks the 60, you'll probably see 75 or whatever the next level is going to be where it's going to go. But anyway, in the near term, it's bearish. And you should be looking out for these levels, I think, the 44,555 and the 42,730 in the Bitcoin. And that's all for this week. Thank you, as always, for spending a little bit of your weekend with me. Let's do a quick recap of what we just saw. The retracement back to the upside in the S&P 500 has been pretty large. It has taken out the 61.8 fib. It has crossed back up over the 20. When we take out that 61.8, usually the odds increase that you go to the 100% retracement, meaning that we would retest all-time highs. However, tech stocks are still a thorn in the side of the market, although they are improving. I hope that I was able to convey to you that very exact level, which is very, very important next week, which is essentially Friday's close. It also ties in with that double bottom low. It's very significant. If you recall, I used that significant word in the video. If we can get above that significant low in the NDX, which I showed you in the video, probably opens door to a little bit higher in the tech stocks. And as we know, the market, everything will kind of move all together. So we shall see. I also gave you a few trade ideas to look at. In the meantime, if we do get kind of some bullish follow through, a lot of them on the tech side, those are some of the names that I would be looking at. All right. Advance heads up next week. This is relatively rare for me, but there will not be a video weekly. I repeat, next week, there will not be a ShadowTrader video weekly. So don't be looking for one. I'm going out of town for a couple of days. At the end of next week, I will not be able to record content. So again, no ShadowTrader video weekly next week, but of course I'll be back as usual the week after. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.